Good morning, ladies and gentlemen. Tuesday, January 23rd. You've tuned into the Nifty podcast. Today, we have a lot to discuss. We're going to discuss the NFT marketplace war heating up, the recent announcements in the Ordinals ecosystem, and we are going to be joined by a very special guest, Mr. James Seyffart, who is an ETF research analyst for Bloomberg and has been the guy covering the Bitcoin ETF in depth. So we're going to discuss what is going on with the price action, Bitcoin's dump, and whether Grayscale, our good old buddies over there, are responsible for it, and what will be coming next in terms of other ETFs within crypto. I've seen James talking about the the Ethereum ETF having over a 50% probability of being approved this year. So it's going to be very, very interesting to discuss that with James. Wanted to let everybody know that today's show is actually brought in partnership with Steve from Coffee with Captain and his book, The Everything Token. So we've all tried to, really have the conversation with friends, with family about, what crypto is, what Bitcoin is, what NFTs are. And often those folks just don't get it. Steve's book, which is available on Amazon Prime today, explains NFTs, Web3, and blockchain technology to non-native users in a way that is extremely easy to understand and can effectively onboard the next wave of consumers and entrepreneurs. So you can actually order the book today for only $29 on Amazon using the pinned link on Twitter Spaces or in the YouTube description for today. You can buy it for your family and friends, or you can buy it to read on your own, of course. Big shout out to Steve, from Coffee with Captain. Love listening to those guys. Really, really great voice in the space. So pumped that he's got a book in the market at this point. Given that we have James joining us in about 22 minutes, I want to keep things moving.
The Kindle is $16 though. You got to clarify that. You said $29. You can read it for less. You don't need to spend the $29 unless you want the hardcover. In which case it appears it's $26.
Yeah, it's at a discount, actually. You can save 9% if you have a Prime membership, and you can use an Audible credit instead, and you can get it instantly.
I have way too many of those Audible credits, I'm going to be honest. I've been looking for things to listen to, and I've been downloading Tony Robbins books. And it's like they're old tapes. So it's not even new content. I'm listening to 1987 self-help inspirational pump it up talk.
You should I'm the same. I have way too many of those credits. I have to say one of the best audiobooks I think I've ever heard is the David Goggins one, because Goggins actually, you've heard it? Okay, fine. Then you're on the same page as me. I have no other recommendations because I still have too many credits and I need to spend them as well.
The Martian, that's a really good one. The Martian sounds like you're listening to a movie, actually. I got stuff on my face. It looks like I did a bunch of blow this morning, which I did as usual. You know what I'm saying? In terms of the David Goggins one is good. Atomic Habits is good whether or not you read it or listen to it. I believe that James Clear is the one that wrote that or reads it in the audiobook. But anyways, this book is a good one as well. So I'm definitely going to check it out.
Yeah, I mean, David Goggins reading is going to get you fired up. He's just got that, that way of speaking that'll get you motivated.
I was listening to his book and I went on a run and I got so fired up. I was supposed to go on a 3-mile run. And this is still when I was back problems, knee problems. I ended up running 7 miles before
me too. Me too. I did a marathon. I did a marathon on his book. When I hit the wall, it got me through the wall.
It was so bad though. I had my brother's bachelor party the next day and I ran 7 miles and I destroyed my right knee. I couldn't walk. I was limping the entire bachelor party. It was terrible.
You sound like David Goggins in the book, literally. He was so improperly trained and he's just saying, stay hard, even though you're blowing out your knees, and completely in that book, he's in the bathtub, literally crapping himself, and he can't move his body. He's stuck in the fetal position, basically. I don't think he can expand his body because his muscles are spasming. The conclusion of the book is do yoga. That's basically the conclusion of the book. And he was like, wow, it turns out that stretching is helpful and that running in literal military boots is probably not the ideal move, no matter how masculine or hard or challenging that is. It's pretty ridiculous, the stuff that he was doing. He never really like adjusted his commentary over time to like, he still has the same theme of what the book went with, but the conclusion, he hasn't spent a lot of time talking about yoga. I'll just say that. Like, you don't see him discussing yoga. It says like, you got to keep working harder. So I don't like, no matter what, it really sounded like he also needed just a moderate level of therapy would have been helpful given the trauma that he suffered. At least yoga. Okay. Like, I feel like at least yoga would have been helpful.
Literally nobody asked him to run. Like, he's just running. Nobody asked him to. When me and Clemente were still making those shorts like that, I made a short where I basically like went off on this trying to be funny. And one of our audience members sent me a private DM and said, yo, man, I saw that David Goggins clip you did where you said that like he doesn't have to run and you were kind of making fun of him. He's like, I don't think it's a good look for the channel. Somebody sent me. That just shows you that people really love David Goggins. Like, it's actually a thing. Yeah.
Well, he kind of like epitomizes the male energy that society has projected upon men, basically, where it's like, don't speak your emotions, just keep running through the pain, basically. Like, it's all good. You need to carry the weight of everything in your past, basically, no matter what, and don't fucking talk about it, basically. Like, just keep running through brick walls. I don't care what happened. I don't care if you saw your mom get aggressive, like the beginning.
There's a lot going on. Yeah, it's like
dragged down the stairs.
Really intense stuff. And people in the manosphere on the internet, they're like, David Goggins should be doing steroids. Like, given everything that he's doing, there's actually no reason for him to not be doing, HGH or testosterone to help him recover, because it's not like he's competing. He's literally doing all of this for no reason. Anyway, let's dive into the weather report. Signal, you can rock and roll with that. Please take it away.
Yep. Absolutely, folks. It is Tuesday, January the 23rd. That market volume is coming in at just under 31 million. If you look at the market leaders, looking at top movers, it's Cool Cats. They're up 10%. Got Meebits up 13%. Crypto Undeads, they're down. They're down to 10.5. So, and Pizza Ninjas also suffering a bit. They're down 15% to 0.06 BTC. Over the past 24 hours, the top four stories. Well, first of all, the biggest story obviously continues to be crypto. It's just taking a beating. It's taking a Goggins beating once again. And this has been fueled by Grayscale's GBTC outflows, with Bitcoin down another 5% to sub 39K. You got ETH, that's also down around 8%. Solana also down around 11% to sub 80. And all of the alts are obviously getting absolutely smashed at the same time. Over on the marketplaces side, well, Magic Eden started its marketing blitz, first announcing that marketplace users will be rewarded in the future with a third-party NFT token by non-fungible DAO. And then they teased a very highly produced animation teasing their upcoming multi-chain marketplace featuring apes, Pudgies, Bodoggos, the Wizards, and more. And it's capped off and experience the best of all chains on Magic Eden. So Magic Eden just coming in to be that number one marketplace. Over on Ordinals, we had the Sotheby's Ordinals auction finish yesterday, totaling nearly 1.1 million in sales, with half of the lots selling for over their high estimates, and headlined by obviously the one-of-one Quantum Cat that was sold for a whopping $254,000 or 6.3 BTC, as the Quantum Cats get one day closer to their big mint day happening on Monday. And then lastly, just as Doodles were going to be titled winner of the day with an over 40% run to 3 ETH last night, a notorious airdrop farmer came in and just dumped 69 doodles into the bids, bringing that floor down to 2.4 ETH with 235 doodles left in their wallets. We could see more dumping happening there. Damn. That is all for the weather report, folks. It is back to you guys in the studio.
Man, see, that's the thing. When we were at our little get together on Sunday that I referenced, I'd asked one of the people we were with what if he thought that Cool Cats could, make a comeback purely because people are like, hey, these are actually really cool collectibles. We like the art, blah, blah, blah. He said, I feel that Doodles or Moonbirds would be more likely. We then saw both Cool Cats and Doodles rallying. But these rallies, there's so many bag holders, like legacy bag holders. That person has 270 Doodles. I'd love to know the USD value of that allocation at the time of purchase for that person. And that person just casually dumped over 50 into the bids during the rally. There's got to be more people like that are just ready to kind of pour some cold water on any rallies that we see. That's what you're going to face. That's the resistance you're going to face with these NFT projects, Nick.
He moved the floor 0.02. That's how strong the bid is on Doodle. So I don't know that it necessarily.
No, it was at 2.95 before he dumped. So this person dumped at 2.95 and it brought it down 20%. Now it's at 2.35. I think
the floor is different than the bid level. So I don't know that the actual what was the highest bid at that moment in time, not what was the floor price.
I would say they were dumped at 2.7. So I would assume that was the highest bid then.
So if it's 2.7 and down to 2.67, that's the power of Blur, that there's that much bid liquidity on Blur is what's so crazy, such as OSF's ape trade.
Yep.
And him selling the literal top of the crypto rally recently is also another great trade from OSF. I want to box him just because I'm so fucking angry about how well his portfolio is performing against mine.
I think he's still training, so you might be able to get him. I also think
he'll beat the shit out of me, probably.
I was going to say, I don't think he'd take just any fight, but I think he'd take the bout against Nick for sure. He'd come out with that. I mean, the strategy he had where he's just like, yeah, I'm going to run out and throw 1,000 punches in the first 15 seconds was just absolutely hilarious. I'll watch the guy box anytime. Anyway, some updates from the newsletter. This is the Nifty Daily Digest. This is available at thenifty.com. It's also posted to X platform every day. First story, Tensor teases a mechanism to long and short NFTs in their marketplace with the new price lock feature. This is going to get very interesting, ladies and gentlemen. We are seeing a full development of NFTFi at the beginning of the second true cycle of NFTs. I cannot wait to see how all of this plays out. A lot of people are going to get wrecked. A lot of people are going to get rich. It is going to be wild to see how it goes. A short squeeze on an NFT collection would go that's insane. That is insane. I can't wait to see it. Second story, Oniforce announces a 3,333 supply ordinals collection will be coming soon with the allow list opportunities for existing Oniforce holders. Oniforce is up 17% on the news in the last 7 days to 1/8. Interesting. So 3,333 new NFTs in this market on ordinals leads to actual price appreciation on the collection. That is very, very good to know. Next story, the major mover of the day is Quirkies. They have rallied over 2x in the last 7 days. Wow, to a 2 ETH floor. Damn.
We missed these. So these aren't on Blur, Pio, which is why they weren't on my radar, but they were literally sitting at 0.7 ETH less than a month ago. The big contributor that I could find to it was they hired someone new on their team, JPEG Poppy, who was like I would call him an NFT degen style. And he's been making moves.
Hold on real quick. The parody name of the character in Joma, Nick, your old neighbor Joma's videos was, I think his name was Crypto Poppy. That was like Joma's parody of a crypto person. We have this gentleman professionally being known as JPEG Poppy. It's funny how art imitates life. Anyway, Clemente, please continue.
That's it. I've just been seeing him all over Twitter when before I couldn't see any Quirkies. Now I've seen some. And he's been the main leader behind them. I don't know how involved he is, if he's the leader behind Quirkies now, but whenever NFT Stats has been tweeting about Quirkies, he's noted like, hey, JPEG Poppy is the reason why, or the main leader behind this movement.
Okay, well, JPEG Poppy is putting the Quirkies team on his back, just crushing it. Bunny, you got your hand raised. Welcome to the show, buddy.
Yeah, he's just like the head of Web3 over there now. He's not like the CEO, Clemente. He's not like calling the shots.
So that's the only information you found which caused this price to 3x? Because
yeah, I'm with Clemente. That's the only thing I would have pointed out is that higher. It has been the biggest catalyst.
A gentleman. We're gonna poach JPEG Poppy,
and now it's 2 ETH. What the hell is up with What is Corky's? I don't understand. I completely.
Are you serious?
Yeah, I actually am.
Quirky's actually has the best NFT merch that I ever ordered.
Okay, so and is that because you now own a $4,000 asset? You get to buy their best merch?
Yeah, I got direct access to. I don't own it anymore. I sold these things a while ago. But yeah, it gave me direct access to their merch store, which is pretty cool.
2 ETH is wild. How much is a DGOD right now?
3.
Okay, that's pretty wild to me. But anyway, JPEG Poppy putting the Quirky's team and ecosystem literally on his back. Nothing more bullish than JPEG Poppy joining your organization. Clearly, we're gonna poach him. Everything's gonna pump hard. Anyway, last story: U.S. Senator Elizabeth Warren's anti-crypto army or anti-crypto tweet got community noted after she stated that rogue nations are using crypto to dodge sanctions and undermine the United States national security. Love to see a good community
note. They're
note.
also using HSBC.
The financial institution HSBC is okay. Who blocked? Did you block?
Yeah, from the portal account. Got to do it.
How do you read her tweets then? You don't have her blocked from your personal account?
Yeah.
Why you really think this is funny? Okay, fair enough.
I'm putting it on for the portal communities for the people. So we also blocked Vanguard last week, believe it or not.
Are you tweeting out that you're blocking them? Okay.
They're our best tweets. The Elizabeth Warren one got like 20,000 impressions. People were psyched.
Okay, fine. I didn't think we were going to do a partnership with Elizabeth Warren or Vanguard, so fair enough. Anyway, okay, cool. Moving on. Yes, we got Sean Mullen coming through just being like, I love the Warren block. Anyway, quick hitters before James joins us. He's going to be joining us in just 7 or 8 minutes. Magic Eden's teaser and their marketing is ramping up this week. Could we see Magic Eden actually take away more market share from OpenSea and Blur? Well, certainly from OpenSea. Right, certainly from OpenSea. Blur seems to be the consensus #1 NFT marketplace at this point and continuing to grow, with Magic Eden really overtaking OpenSea in the #2 spot. Yeah, I mean, any insight here, Nick or Sig, on what you think about Magic Eden's moves in the recent, call it the last quarter?
Thoughts on Magic Eden's moves? They're making moves. Very exciting. You know,
this trailer was insane.
It's
a good animation.
Part of the trailer was the Bodega that was in there. It was interesting way that they animated the Bodega. I think that we could have assisted them with that. But other than that, yeah, I mean, very exciting times over at Magic Eden. What is this is just a promotional video, right? Like there's nothing else associated with it other than the fact that implying that the ETH marketplace is coming. And that may happen as soon as today. That's not clear, but I did see someone from Magic Eden imply that there's something happening today, and that would not be the NFT token drop. That's the other thing going on, which is very exciting. The space is excited about that. You know, Magic Eden is not the #1 marketplace for Solana. Tensor is. And I'm assuming with Tensor negating their point system, or at least pouring cold water on it, I wouldn't be surprised to see a significant transition back to Magic Eden as one of the top leaders in the space. I don't know if we have a good chart associated with volume based on market on the Solana side. Clemente, can you pull that chart?
So it's been hard to find a chart that's
has it?
Slam. I've been looking into it. Sniper actually provides good analytics on a daily perspective, but on the dominance side, I will look into it though.
Sniper
do
has.
you think,
Oh, go ahead.
no, I was saying, do you think this is going to force the hand of OpenSea to do a token at this point? Because I feel as if like there's so many nails in their coffin that have happened between Blur and now Magic Eden is clearly going to steal a significant amount of volume here from people who are just going to be trying to get the token that we've all wanted since for the last 2-3 years. I just like the volumes on it. I'm sorry, spitting my words today. I'm finding a compelling reason to be using OpenSea at this point, right? Even if you're browsing, I think Magic Eden have a really good browsing experience. Now they've got multi-chain. What is the reason to use OpenSea at this point? And so I'm just wondering, will there even be an OpenSea by the end of this year or going into next year? Like, can they survive the next 2 years if people aren't actually using the platform because everyone is being incentivized to use every other platform except OpenSea?
2 years is a long time. 2 years is a long time.
It's a long time, but they definitely need to change their business strategy because all their competitors are coming for their jugular and it's working well.
And I'm not seeing a lot of defense, right? They're not parrying shots and moving their head, right?
Well, they haven't been rolling much shit out, but the OpenSea, I did see that they're rolling out a V2 or something like that of OpenSea, which aims to address a lot of these things. That said, OpenSea Pro is already on here. Here you go. Clemente's got the data pulled up. Let's fucking go. So we got the marketplace data showing up from what's the domain on this?
TXO.
It's TXO, Nick.
Clemente just pronounced it like TJ Miller on Silicon Valley pronounces aviato. That's the way he said TXO. Anyway, go ahead, Nick.
Magic Eden's at 18% of Tensor. So it's still much smaller at this moment in time. I think the biggest issue, Tensor is the pro, has the best pro interface compared to Magic Eden at the moment. And I'm guessing Magic Eden will have to evolve their pro interface, but where they're winning is their cross-chain support. And I think that that's the biggest move here is they're leveraging their position with Magic Eden. What I'd look at, click on Bitcoin on the blockchain on the left here on TXO. And OKX, wow, is the biggest driver of this, but Magic Eden is just dominant on this side of the chain or on this chain. And I think that that's particularly unique for Magic Eden. They're going to have ETH, Bitcoin, and Solana. You may just call them the phantom of the NFT marketplaces is how to sort of view it at this point in time. So I think that they're quite dominant on that front. I also don't know if the OKX data is skewed primarily because it's driven heavily by what do you call those things? The BRC20 tokens.
Yeah.
So the inscriptions. Yeah. And I think that that's what is skewing this data. OKX stepped in, absolutely dominated this side of things. And we see a number of marketplaces that are now trying to replicate that, including on the Solana inscription side of things, which I don't know how active that is at this point in time. But I mean, it does. The SPL 20 Souls token has 2,500 of volume, 2,500 Sol volume over the past 24 hours, which is still, well, now that Solana's at $80, it's 200 grand, which is not that much. But I don't know, maybe it carries over. Compare that to Fragana, which had 14,000 Sol in volume. Can you believe Fragana's still kicking at that volume? That's crazy.
14,000 in the past 24 hours.
And Crypto Undeads is also right up there with 14,000 Sol volume with the floor down to 10. NFTs got to be on a little bit of a pullback here as you see crypto crash. That's never good for the NFT side of things as well. So I don't know. We'll see what happens here.
Yeah, absolutely. I mean, you saw Mad Lads pull back as well. Also, the kind of NFT Fi side of things, seeing the Mad Lad, the numbers associated with Mad Lad loans was very interesting for me this morning. We are going to be joined, ladies and gentlemen, by James Seyffart in just a moment. He's the guy when it comes to ETF research right now on crypto Twitter. Very excited to have him. Just waiting for him to connect on Twitter as well as here on YouTube video. Last topic before we bring James on. We had the huge sale through Sotheby's for the one-of-one Quantum Cat from the Taproot Wizards organization, $254,000. Of course, on this show, Nick and Clemente infamously did a double or nothing bet that the sale would be above $300,000. I told Clemente that that was not a good bet to make. He made it anyway. And as we expected, it did not clear 300K. It came close, but that's how it works.
Hey, here's $100. It's going back in the cash pile here, Clemente. So I added it right back on here. You can't come pick this up anymore, okay? So I like that cash that you're waving around. This is basically all the money that we have left after this crypto dump. I'm down over $100,000 at this point in time on this pullback. It is a little bit painful. But yeah.
You got to buy when it feels bad, Nick. That's when you know when it feels bad and it just, he's like, oh, I don't want to spend any money. That's when you buy.
If it wasn't for this pullback, this thing would have hit $500,000. The problem was these Bitcoin whales started feeling nervous, right? Like they would have been, if Bitcoin would have kept rallying, if we were doing this 2 weeks ago, everyone would have been feeling rich, throwing money around. It would have been a whole thing. But unfortunately, that didn't happen.
I don't know about that, but what I will say is you're seeing some of the OGs like Jason Williams, the author of Bitcoin Hard Money That You Can't Fuck With, just basically flexing their level of liquidity. It's right now that liquidity makes a huge difference so that you can actually buy these dips. It's going to be really interesting to see how things play out over the next few weeks. I think that we are just about ready to bring James on. We have him on stage here on Twitter, and I think we're good to go on video as well. So ladies and gentlemen, we have James, the ETF research analyst for Bloomberg. He's been covering the Bitcoin ETF approval process for a while now and has really emerged as the guy on crypto Twitter when it comes to all things Bitcoin ETFs going into the approval. And now we're going to be very interested to hear what he has to say about the ETFs now that they're actually in market. James, welcome to the show.
Hey guys, thanks for having me. Happy to be here.
Our pleasure. Nick?
Are you allowed to trade ETFs? That's the first question I'm wondering.
No, I'm not. I'm not even allowed really even to trade crypto right now.
Really?
There's like extreme limitations. Yeah. I can get approval for certain ETFs, but even if I wanted to buy an S&P 500 ETF, ironically enough, I need to go through compliance and get approval. So most other people who do research, specifically at Bloomberg Intelligence, like ETFs, like you can just buy them because it's a basket of stocks and you're not like making picks or calls. But we have like the only team with the most strict coverage. So I can't even buy an S&P 500 fund if I wanted to without getting prior compliance approval.
Did you own crypto prior to this whole run up?
So I got yeah. So I first started buying crypto in early 2017. So that's how I got involved personally before I got involved professionally. When I moved into Bloomberg Research, Bloomberg Intelligence, I reported to people, Mike McGlone, who's a commodity strategist, and Eric, who's my colleague and boss on the ETF side of things. My experience was more with hedge funds and ETFs. But I started covering commodities as well as an associate. And essentially he was like, we need to start covering cryptos and what's going on here. Do you know anything? I was like, oh, I actually do. And ironically, Kathy Wood, if you know, I'm assuming everyone knows who that is. It was her white paper. She gave a speech. She wrote a Bitcoin white paper in 2016 that initially got me into it. Aside from my suite mate back in college in 2011, who put Bitcoin mining software on my computer. So I've had some, but basically I haven't been allowed really to trade or do anything with it for years now.
That's tough. And, we've seen Kathy Wood just making some big predictions recently. Also some great research. Shout out to Yassine over at ARK. Does some great research on Bitcoin and other crypto assets. Nick, did you have a follow-up question for James?
Yeah. Well, although you have it written down as well, but we both have the same question here. One, we need the bleeding to stop, James. So what I was trying to, what would be helpful to understand is contextualizing what this GBTC situation is we already know like the previous trade that existed was essentially that the or the net value. I don't remember which term we utilize with this with GBTC.
Net asset value, NAV.
Yeah, NAV, yeah.
Was trading at a significant discount, something like 40-50% at some point, and we saw that gap eventually close. Now that the ETFs have launched, in which the net asset value is supposed to trade within single-digit basis points of where the underlying asset actually is, which I have questions about as well. But I'm curious, what is this? What is going on with GBTC at this point in time? Do you have a good understanding of that? And can you help contextualize what this transition is, where people are essentially selling out of it? Is that just because the trade of the arbitrage opportunity has completely closed and now people would rather move that into ETFs, or is there some bigger sort of underlying trend going on?
Yeah, so I could answer this question and probably talk for about 30 minutes straight. So feel free to interrupt me. I'll try to keep it shorter than that.
That's why you're here, James. I've been listening to your podcast for like 72 hours nonstop. You don't know this, but I've heard you talk about this a lot. Let's go.
Yeah. So, yeah, it's complicated, right? So part of it is what you just talked about. That discount has collapsed. So there was a lot of people that were simply buying GBTC, getting exposure to Bitcoin because they didn't give a shit about the price of Bitcoin. They were playing that discount, right? So
yeah,
that discount is gone. They're unloading. I have a note that came out this morning talking about some of the sellers. Obviously, FTX is probably a huge chunk of the selling. I have my beliefs that DCG is also a huge chunk of the selling. They are the largest known holder of GBTC, and we know they've had issues with Genesis and their bankruptcy. And just overall, like you look at the futures market, that has seen a massive drop off in open interest. So you can view that essentially as outflows as well. People are unloading ever since the ETF approval came. So people were loaded up going into the ETF approval, and they're unwinding their trade. That's what's happening here. The other thing is ETFs still, even with these $3.4 something billion outflows we've seen from GBTC as through yesterday's trading, we're still net positive on Bitcoin ETFs in the US, right? There's still money coming in. So like I feel like people are like, oh, the ETFs are taking in money. How can the price go down? And it's like, guys, the ETFs are a big slice of the market, but they are not the market. They are a slice of the market. Same goes for futures, which again, they are a big slice of the market, but they are not the market. So I think there's a lot of people selling because of that. There's also a lot of trading happening right now. A lot of the newer ETFs, we call them the newborn 9, they were trading at a slight premium. GBTC, even after converting, was trading at a slight discount. Nothing compared to the 50% we were seeing. It is within 1%. It's near zero right now. We call that band the band of like where a given ETF trades from a premium to discount, the arbitrage band, because there's some level of friction in the underlying market or the way the underlying market works where these APs, these market makers, there's Wall Streets, there's things they have to do that cost money. There are transaction costs. There's all these other things. And the more friction in the underlying market, or the more friction in the underlying market transitioning to the ETF itself, that wider that band can be, the wider the premium can be, the wider the discount can be. But again, in most cases, that stays within 1%, usually within a few basis points, particularly if you're trading like US equities or something that's trading at the same time as the ETFs. So yeah, things are trading very tight. The spreads are obscenely tight. The discounts are near zero and premiums are getting near zero. Everything from like an ETF perspective is looking exceptionally good from my point of view. But obviously, I see what's happening to the price. I'm not blind, but like from an ETF perspective, this has been a huge win from my point of view.
And real quick, I should note, James, and I'll throw to Nick in a second, but you've been pretty sober about your expectations when it comes to these ETFs. You've kind of called people out for almost having a moon boy mentality, if you will, on what their expectations were. So you think things are going really well here about 10 business days into these things trading?
Yeah, I mean, the one thing I would point out is that the last chart you just showed, GBTC had its largest outflow day ever yesterday, 640 million, 640. So that's it's not slowing down. It's honestly picking up. Like that's the biggest outflow we've seen. But the other ETFs are holding their own, right? Like that is that's impressive on its own. Those ETFs we have. So IBIT and FBTC are two of the fastest ETFs in history to reach $1 billion. They did it in 4 and 5 days. There's only 3 ETFs who have done it faster than 4 days. And one of them is BITO, the Bitcoin futures ETFs. So they're smashing records left and right. The one thing I will say, people are like, no one was talking about this overhang of GBTC. I mean, one, I don't expect everyone to read my notes on the terminal, but I have been talking about this for a long time. Particularly, I talked about how the 1.5% fee was like kind of like might make the outflows even worse from GBTC. But yeah, we've been looking at this unlocking of these GBTC Bitcoin that has been sat there forever, 600,000+. And this unlocking was arguably, without these other ETFs coming to market, was going to be a de facto bear. Like if the other ETFs didn't get approved and GBTC was the only one that was allowed to convert, I would have considered that a de facto sell the news super bearish event. I'm technically not allowed to talk about prices or what I think prices are going to do, but like I am covering like what we're viewing and trying to understand what's going on in these markets, and you can kind of infer like what I'm thinking based on the data that I'm putting out for the most part.
So is the target for GBTC to go to zero in terms of net asset? Like who's going to buy the GBTC when you do have the options of ETFs at this point in time? Also, how the hell is the creator essentially of GBTC allowed to just dump all of the like, how do they own such a significant portion of this? I didn't even realize that that's the case. That just feels like a massive conflict of interest here.
So they've been locked into holding GBTC shares. So one, they didn't want to sell at a discount, even if they could. And Rule 144, because of the way that these trusts came to market, if you are I forget the technical term, but if you're like an associated party with the underlying the trust, you can't sell more than a certain percentage of the volume or a certain percentage of the outstanding shares on a quarterly basis. So Grace DCG was basically locked into holding the shares. So one, they held shares because they did that buyback program to try and help prop up the discount in 2021 or whenever it was. So they had a lot of shares then. They also took delivery of a lot of shares via Genesis. So Genesis allowed people to put GBTC shares up as collateral for a lot of their trading, their leverage, what you name it. And DCG basically ended up taking on all those shares. Remember that whole, like, they gave them a loan and they took delivery of the shares. So DCG actually had double this. They had like 70+ million shares of GBTC at one point. Some of that went to Gemini in the earn situation, which my view is I think Gemini likely sold that huge chunk, but they still had over 5% of the shares outstanding of GBTC. But you got to realize everyone's like, oh, Grayscale is dumping. One, it's not really the case. It's just people are selling the ETF. They're not dumping. They're just facilitating the actual trust, right? So it's market participants that are dumping the shares. But in the case of DCG, technically, I believe they are likely dumping a chunk of their shares, but they have to. They need the capital. There's all these issues with Genesis, DCGs, and a lot of other issues. They need the money. So it would not be surprising to me to find out when we do get another annual report out of the Grayscale's GBTC, whenever it comes out, or a 10Q, whatever, to find out that DCG has completely cut or dropped almost all of it. But that's the efficiency of the ETF wrapper. Look, all these outflows, if we were still GBTC and money and the shares are being sold, we'd be looking at 50% discounts again. Yeah. The benefit here is that the ETF wrapper that allows that creation redemption at NAV is keeping this thing super tight and trading in line with price. And then they're selling the Bitcoin on the open market. So yeah, it's causing the price to collapse, but the alternative would be they would be selling and you'd have a huge dislocation in the GBTC price and discount. I think that was the question you asked, but
last question, and I want to hear what Pia's been researching this, but the question is how do you determine how much or come up with any estimate of selling pressure that we anticipate outside of the day-to-day traders that are participating in the market? How big of the pool that you just said of the number of shares and the amount of Bitcoin that's in there, it's like a massive amount. And so selling billions and billions of dollars of Bitcoin is inevitably going to have a negative impact on the price action. But I'm just curious how big of a move we anticipate this to like how much further the bleeding gets associated with this.
Yeah, so my initial guess before I even saw the 1.5% fee was I thought like we'd see 10 to 25% of GBTC leave, maybe a third of the assets over the longer term. I will admit that it has been slightly more aggressive than I thought, but you got to realize all those reasons I just talked about why people are leaving. There's also people leaving because the 1.5% fee. And if you're in a tax advantage account like an IRA, which I know for a fact, a lot of people that follow me, that's what they were using GBTC for, right? They were buying, if they were buying Bitcoin, they were buying it on their Coinbase accounts or their Gemini accounts or Kraken, whatever, FTX. They were buying it directly. But for their IRA, they were like, I want exposure to my IRA. And everyone was using GBTC or ETHE from Grayscale. So they don't have to worry about any tax being tax locked, right?
Yeah.
So because they're in a tax advantage account, they can sell without having to deal with capital gains. So undoubtedly, a chunk of the money is from people that did exactly that. That said, there are a lot of people that are trapped in this thing because you have to basically have to do the math between would I rather sit in this thing and lose 1.5% a year, or would I rather just sell now and pay a 15% or 20% long-term capital gains rate, or possibly short-term cap gain rate, depending on when you bought it.
Yep.
And that's something that people have to decide on what they're going to do. So I'm not a tax professional, seek tax advice, what have you, not financial advice. The other part of it is you asked about like who would use this. You got to realize this thing is way more liquid. The spreads are tighter and it trades better than pretty much any other Bitcoin ETF right now. Now, it's not at the level of something like a S&P 500 ETF like SPY or some other ETFs that we refer to as pseudo futures. They basically become so liquid that they are more liquid than even many derivatives. But GBTC is the most liquid product on the market still, and they're trying to use that to build up their market, to hold up their market share. I think personally, I think 1.5% was a little aggressive. Like I thought they could have gone under 1 and it would have been a little better, but they stuck with 1.5. And you got to realize their math here is right. So they were charging 2%. If they wanted to come in and compete with everyone, even if we exclude the waivers, which they're down to 0% expense ratio and many of these other things, they would have had to cut their fee by 90%. So their revenue is being cut by 90% if they want to compete at the 20 bips level. So their math was probably like, we'll just go to 1.5% and hopefully that the offset in outflows that we see does not correlate to 90% decrease in revenue, right? So that's probably the math they were doing. But the other part is you got to realize that 1.5% fee, if you're trading this thing just for, if you're a market maker, just as a hedge against these other ETFs or whatever, you're making markets in Bitcoin itself or these funds, if you can do this at a spread of like 1 BIP, 0.01% of the bid-ask spread or 0.02. That's what we've seen GBTC trading at. I've seen IBIT get as low as 0.08, 0.07. So that's pretty damn good. Very, very good for a new ETF. But if you're trading over like a 2-day period, that 1.5% fee does not matter because the way the fee works is like it comes out. Basically, you could think it out as like them taking a chunk of the assets, 1/365th, like one for every day of the year, and they take a little bit of that fee out. So like if you're trading super short term, you couldn't care less what the expense ratio is. That's why a lot of these leverage ETFs have high expense ratios, because for the most part, people are using them to trade. So like they're going in and out. So the longer you hold, the more impactful that expense ratio is. The shorter you hold, the more impactful the transaction costs are. So if you can get it out because it's very liquid and you can do it anonymously and the spreads are very tight, that's going to be more valuable to you as a short-term trader than something like buying one of these other ETFs that's way more valuable as a long-term buy and hold. And this is something we see across the ETF industry constantly. People who have built up liquidity, embedded assets, embedded use cases don't really have to cut fees to compete with others because the traders always go back to that one. So it's yet to be seen if GBTC can actually hold that wall and defend that turf. But that's basically what's going on here.
Sorry, that fee is daily?
So no, the fee is 1.5%, but the way to think about that, the way I describe it is like, so I like to use a termite analogy. So if you think about your assets, you put in $10,000 into a fund and the fee is 1% or whatever it is, you can think of the bigger the fee, the bigger the termite, and the termite just takes a bite every single day. They just take a little tiny bite out of it. That's the way most ETFs work. GBTC worked in arrears. I think it was like taking a bite every month, but it's correspondent to the actual expense ratio of the fund. So if the fund is 1.5%, it's 1.5% divided by 365 that's coming out of the fund every day.
But
so that's the way. They don't charge you. They just take money out of out of the fund
on the transact.
No. They basically would take Bitcoin out of the fund every single day. So they take a certain number of Bitcoin, whatever 1.5% divided by the daily number is. That's what they take it out. That's the way ETFs work. So GBTC, before it converted to ETF, I think they took that fee out like every week or month. It might have been a monthly thing. So they took. So if you watch like how much does one share of GBTC equal to how many bitcoins at like 0.000 whatever, that number like every month or two like slowly dropped like very minusculely because it's such a small number. But you got to realize the other thing with that termite, that bigger the termite, the way less the way less wood you have left at the end of the day, right? So like the money compounds if you can keep earning it, but so do fees. So fees can really eat away at your returns.
The Bitcoin or the underlying asset is the wood, the termite is the fee, and the termite is chopping away at the wood. You have to think that that fee structure for Grayscale, and we're going to move on from Grayscale in a second, but regardless, that fee structure has to, do with the fact that Grayscale's had this shit show situation over a year with Genesis and with Gemini Earn and everything that they've had to deal with. They're probably trying to take advantage of the fact that you pointed out that some people are going to have to make the tough decision that if they're not in a tax advantaged account, if they liquidate their GBTC, they're going to have to pay those taxes. So like you said, some people are going to stay, but it seems like it's a no-brainer if you're in a tax advantaged account to get out of it. James, is the Grayscale, are the Grayscale outflows, is that the most significant story in the ETF ecosystem, the Bitcoin ETF ecosystem right now? Or is there something else that people aren't really paying attention to?
Yeah, I mean, I'm waiting to see when options are eventually approved. So usually for a typical ETF, for the most part, you can just add options. But same reason that these ETFs had to go through that 19B4 process where everyone was following those delays, denials, approvals, that's unique to 1933 Act funds, which these Bitcoin ETFs are. So they need to go through the same process to get options. So I'm watching that. I think the GBTC outflows are obviously like the headline item, but again, I'm going to keep repeating, we still have seen over $1 billion net inflows into these ETFs since they launched. So the ETFs are not the cause of the dumping price, because on a net basis, they have taken in more money than they've lost. Now that can change if GBTC outflows continue dropping and the newborn 9 ETFs do not pick up their inflow to offset that. But for right now, there are net inflows. So that's what I'm watching. The other thing is like the number one thing that most people care about is is assets and flows. Like, so flows are organic demand, right? That is money coming into the fund. You can see exactly what's going on there. Assets will increase or decrease both with flows and with price appreciation or depreciation. So watching assets is important. But the one thing that I keep hearing, both people like that are crypto bulls and crypto bears who just hate the entire thing. They're like, people are talking about volume and like, who cares about volume? They don't know anything about ETFs, because volume is like how you're going to get the big fish. Like, right. Like you could throw this in the water, but if you don't have the right bait, the right lure, like you're not going to get the big fish. And in this case, without volume, there's no chum in the water. So the volumes that we've seen on GBTC and these other ETFs, IBIT, FBTC, BitW, ARCB, all of them, they are very, very, very healthy volumes. Even the ones that are like arguably losing this race are having very successful volume days. Now, some of that is like it's feeding off each other, right? Like I talked about those premiums and discounts. A lot of it is just trading back and forth and arbing the different portfolio, the different ETFs. But that's something that people, I don't think there's a continual discounting of that value. So those are the things we're watching. And I guess that's really it. I can't think of anything else. For the most part, people are covering it. A lot of people were all over the FTX stuff yesterday. I was planning to cover this, but I didn't want to like spook anyone or make things seem crazy. But it was shocking me how few people knew that FTX was likely selling this thing. I mean, to me, that was like a foregone conclusion when we found out that the estate had $900 million or whatever of GBTC back in November. So I just always assumed they were going to be a net seller, which is part of the reason why I thought there was going to be a lot of selling in GBTC, because it's not even just them. There's probably a lot of other like bankruptcies and a lot of other people that were just holding on to GBTC and were like, I need to get rid of this thing, but I'm not going to do it until the discount's gone.
Question for what you just said about the I'm wondering, in terms of the arbitrage gap and understanding the net asset value versus the current price, what resource? I mean, you work at Bloomberg, so I'm assuming the Bloomberg terminal is the best place for getting that information. But are there any public resources that one can use in order to determine what the price of Bitcoin is attached to? If I'm trading FBTC at $28 or whatever it is, here's what that means for the price of Bitcoin. Where is that accessible, and how does one come to a determination of the price.
So your brokerage account should likely have some of this information, depending on what brokerage you get. I guess probably something like Robinhood might not. I don't really know, but for the most part, it's standard brokerage account like a Schwab or Fidelity itself will have this information for the most part. You can go to the fund website. That said, this isn't financial advice, this is just general advice. Like if you're trading an ETF, generally speaking, you should almost always use a limit order because a market maker will get you good execution, right? Like, so if you're putting in an order, as long as you're not putting in a market order, you put in a limit order at a certain number or certain value, like above or below what you're trying to do, whether you're buying or selling, like you're going to get good execution for the most part. I guess if you're trading significant amounts of capital, you might want to like talk to somebody first at one of the brokerages, or there's all these ETF issuers. If you're trading enough money, you can probably talk to the capital markets desk, which are people that help facilitate big trades, tell you how to do it. But for the most part, for like 99% of people, if you're just trading thousands of dollars, like you can even, or less, you can pretty much just put in a market order and assume that you're going to get a very good trade. Obviously, maybe avoid the first couple minutes of the open and like the last couple minutes of the close. So right after 9:30 Eastern and right before 4 p.m. Eastern, things can get a little wonky around that time. But for the most part, as long as you're putting in a limit order, you will be very fine, even at those times. So that's one of the beauties of the ETF wrapper itself. There's so many participants. There's a lot of market makers. These are all Wall Street trading firms. They are not trying to like completely scalp anyone. They're trying to make that vig on the spread between the bid and the ask, right? So I talked about how tight that spread was in GBTC. They make their money by constantly having bids and asks out in the market and then earning the difference between those two things. And with ETFs, because you can always, at the end of the day, you can arb out the differences in prices between them and between the price and the NAV and the underlying, you get a very good end product and end result. There's very, very few instances of people getting completely screwed. But that said, if you really want to do your due diligence, you can go to the fund websites. You can go, there's ways to get the information. As you hinted, I get mine from Bloomberg. So that's not going to help a lot of people listening to this probably.
Makes sense. Nobody's shocked. Signal has a question. I'm going to throw to her after this one. Just one sec. One last thing on Grayscale. So I've heard you discuss on a different podcast that Grayscale might actually launch another ETF. Is that something that you think is likely? And why would they benefit from doing that?
Yeah, so this is my pet theory. There's nothing to indicate that it's actually going to happen. So I guess maybe I was wrong, but essentially we talked about the embedded liquidity and lead that you can have with an ETF. So we've seen this happen in other parts of the ETF world, from both BlackRock and State Street and other issuers. Basically, once you get to an ETF that is very successful and super liquid, we have it with EEM, which is iShares Emerging Markets ETF. We have it with Spider's, State Street's GLD, which is the gold ETF. Even BlackRock did it with their gold ETF, IAU. So iShares launched a much cheaper product, didn't cut the fee on the current product that has all the liquidity and all the options around it and all these other things around the liquidity matrix of these ETFs. GLD launched GLDM, which is a quarter of the cost. Same with IAU and IAUM. Basically what they do is like the fees are staying high. This is where all the liquidity is. We're going to earn money off of this, but we're also going to offer something and essentially cannibalize ourselves for longer term type investors. So some people will sell those higher cost, more liquid products and buy the cheaper ones that are more for portfolios. But the people that are traders, the hedge funds out there, the short-term traders, they'll still use those. So my thought process was that Grayscale would eventually do this as well, launch what we call like a portfolio version of GBTC. They do own the ticker BTC. So I thought they would launch something that would ultimately compete with these other products, but they haven't done it yet. They haven't filed for anything yet. So maybe they aren't going to do it. And I was wrong. So I'll take the L if I'm wrong on that, but I was just a guess. Basically, if I were them, that's what I would do is what it came down to. I probably would have lowered the fee a little bit lower than 1.5%, and I would have launched a much cheaper portfolio product.
Well, Barry Silbert, if you're listening, you just got some tips from James, not financial advice, of course. Signal, question for James?
Yeah. Hey, James, I wanted to ask, so if I want to be in an equities ETF, I go to my broker, I get flooded with, a ton of ETFs that I could possibly invest with, both domestically and internationally. So in the context of the BTC ETFs, do you think out of the new boy nines in the long term, it's winner takes all? Or do you see this in a long term being more ETFs appear and then fees will just be driven down and point to looks like, something which is super expensive. Like the same way we look at 1.5 now, 0.2 will be viewed as very expensive because there'll just be so many more BTC ETFs. I'm just curious if this goes into a more like, will there be more competitors in the future, or is this going to be winner takes all and it's going to be, for example, BlackRock just dominates?
Yeah, so one, it's the ETF industry doesn't tend to be winner take all. It tends to be winner take most. So usually there's one or two ETFs at the top of a category, and then there's some categories have very healthy what we call middle class, where they have a couple hundred million in assets, or even 50 to 100 million, and they're successful, they are profitable, or at least break even. That's the way I'm predicting this. I think there's going to be a couple of people at the top. Right now, it looks like Grayscale, BlackRock, and Fidelity. Obviously remains to be seen, but then there's plenty of healthy middle market from the likes of Bitwise and ARK and Van Eck and Valkyrie, and Hashdex hasn't even converted into a full spot ETF yet. So Invesco Galaxy has partnered together, and they're also in that middle grouping that I would consider. And it's looking like they're going to have successful, profitable products. So it tends to be winner take most, not winner take all, is the first part of that. There might be some new ETFs that come out. We're expecting a carbon one that holds carbon credits in addition to spot Bitcoin. We'll see what else comes down the pipe. The other thing I would say is 0.2% even in the ETF world is really cheap. Like that's way cheaper than I thought we'd be at this point. We basically saw a compression of stuff that in the ETF world, the asset management world typically takes years, months, usually multiple years for things to like everyone starts undercutting each other little by little. And it was just condensed into like a 1 to 2 week period. So the fact that everyone can now buy this obscure volatile asset for just 20 bips right now, it's actually 0% is absurd. Like people should be really like gasping at like how good that is. That said, the fee competition will never stop. It's likely that we'll see some undercutting of fees here and there from different people. But right now, there's a reason so many people are right around that 20 bips. Franklin Templeton's the lowest at 19 bips for the long-term fee. There's just embedded costs. Like you have to pay your administrator, you have to pay your custodian, and custodying these assets is way more expensive than custodying something like a bond or an equity security. So there's a reason that everyone is kind of settled. You can assume we're pretty much at the bottom of the barrel, and some of these issuers are likely not making any money at the current asset levels, or weren't making any money when they launched, even after the first few days. I guess who knows how much what the margins look like for BlackRock or Fidelity, but for the most part, a lot of these guys are probably doing this, and there might be just break even or slightly profitable. You also got to realize these people spent millions of dollars trying to launch these things with lawyer fees and what have you. So they spend a lot of time and money doing this, and it's even likely, and even it's possible and even likely that some of these are like loss leaders, like somebody like Bitwise who has staked their foot in the ground as being a leader in the digital asset fund system. Like they could literally have a product that's losing money for them on a net basis. They can't not have a spot Bitcoin ETF. Same with the likes of Valkyrie and Hashdex. Galaxy is partnered with Invesco on that front. ARK is partnered with 21 shares. Like I think Kathy Wood even said that she'd be fine if ARK B was a lost leader for her. So basically, if you decided you want to compete in this, you might have to just accept that this isn't going to be the most profitable thing in the world. But obviously, the more assets these things get, the more the price appreciates potentially. The more those margins actually could expand, because there's only so much. There's a certain number of fixed costs and there's a certain number of variable costs, and the higher the assets go, typically you get better deals from your third party. So as these people pull in a ton of assets, they'll have a lot more wiggle room to argue with the likes of Coinbase and Gemini and BitGo and their fund administrators and you name it, pretty much everyone. They're index providers, but they can say we now have billions of dollars, we need a better fee, and then they can cut the fee and compete with each other to get more assets. So that's the way this usually goes.
It's really interesting. It's almost like it's a marketing expense or an optics thing for an ARK or a Bitwise, like you're talking about. One question on the timing of these ETFs, the approval and the filing. Is it not an accident that these ETFs were filed and approved before this Bitcoin halving? Like, was it super important in your mind to a Larry Fink to get this across the line before the halving?
No, I don't think that played pretty much any role whatsoever. I can guarantee you that I know for a fact ARK and 21 shares wanted to have an active. The reason they were the first filing, the reason their Gen 10 deadline is because they wanted to have an active filing when they were expecting the Grayscale court case. So I wrote with my colleague Elliot Stein back in January that we thought Grayscale had a 40% chance of victory, and got destroyed on Twitter saying that there was a frivolous lawsuit. It wasn't going to happen. Then after the oral argument, we went to 70%, and then we got destroyed again. Fortunately, we were right. But basically, our view is that BlackRock specifically, I know for a fact ARK and 21 shares, based on the way they filed, they basically got denied and refiled immediately. And I've asked them, and they won't give me a direct answer, but I can tell like that's why they were filed and active at the time. And we think BlackRock was like, we need to have an active application for when this Grayscale ruling comes down, because the SEC is going to lose. So part of it is obviously like BlackRock is a business. Larry Fink wants to increase their revenue and profits. But a lot of it had more to do with the Grayscale ruling timing, because they knew that was going to be the nail in the coffin, essentially. It had nothing. My view is it had next to nothing to do with the halving, which I know some people are going to disagree with, but yeah, that's my view.
Fair enough. I see Nick smiling because he knows I'm obsessed with the Bitcoin halving. So there you go. Next question. As soon as these ETFs got across the line, it didn't take long for Larry Fink to at least, start beating the ETH drum, the ETH ETF drum. I heard you on a podcast, I think 8 days ago, say that you hadn't published your take yet on the likelihood of an ETH ETF being approved. I hope I'm not throwing you under the bus here, but I think you said it was over 50% for this year. What's the story with the ETH ETF approval?
Yeah, I still haven't published because so much stuff is still happening with the Bitcoin ETF that I've been in that world, but I have plenty of my thoughts aligned. We're over 50%, probably 65-ish% that'll get approved just because
for
of the way
2024.
Yeah, for 2024. We think that's going to happen. Ultimately, I think it will happen, but it depends on how much Gary Gensler and the SEC wants to fight this, right? Like, if they really decide that they want to fight this, here's the bull case, right? The way to get a Bitcoin ETF was CME Bitcoin futures. Then there was a bunch of other things listed in the CME. The SEC never accused them of being security futures or security options. So that was accepted. Then they approved the Bitcoin futures under ETFs under the 40 Act. Then they approved a 33 Act futures ETFs, which is now DeFi. And then that basically de facto won the Grayscale court case. And now we have spot Bitcoin ETFs. There's a little bit of a gap here in the sense that we have the 40 Act ETFs for Bitcoin, for Ethereum futures, but we don't have a 33 Act one approval yet. So it's possible the SEC could like lean on this, but Grayscale's already ahead of this and have filed that basically for those reasons. So at the end of the day, if the courts play out, unless Gary has a trick up his sleeve or learned something from the court proceedings, they're going to have to approve an ETH spot ETF. But if they really want to fight it, look, my view is they should approve it in May of this year, most likely. But if he really wants to fight it, he can basically say, make a court force me to do it again. And then we end up back in court in the same way that we saw Bitcoin end up in court, and we'll see how that plays out. So that's why we're way lower than the odds we were at with Bitcoin. But I think just the path of least resistance, some of the stuff I've seen coming out of the SEC, they, by allowing CME to list Ethereum futures and not claiming they should be security futures, so regular futures, commodity futures are covered by the CFTC. Security futures would be dual covered by the SEC and CFTC, and the SEC has the power at any point to say, like, no, these should be securities futures. We've actually seen court cases related to this in the DC Circuit Court of Appeals where Grayscale won. And then they also just went out and freaking approved Ethereum futures ETFs. So from my point of view, like they've kind of like pivoted and they've given up on fighting this fight with Bitcoin and Ethereum. So that's why we're over 50% odds of approval. But if Elizabeth Warren and Gary really want to fight this, they can basically pull this tooth and nail and push things and basically have a court force them to do it again in the way that Gary has basically said the court forced him to approve spot Bitcoin ETFs.
Isn't there still a pending lawsuit, though, about them claiming that Ethereum is a security as well as like Solana and some of these other tokens? I don't know what the state of that situation is, but if it is a security, wouldn't that imply it's a security future?
So basically, if the SEC goes and says that Ethereum is indeed a security, which they haven't done in any of the court cases I'm watching, like if you look at the Kraken ones and the Coinbase ones, Ethereum is not mentioned.
Right.
Solana is, but I think that's by design. The other problem here is like, right, the CFTC is on record multiple times saying Ethereum is not a security, as a commodity. Even Gary at one point had said that basically Ethereum had converted from its ICO where he thought it was a securities. This is before he was at the SEC. Yeah. I can't find the video anymore.
The MIT days, right? The lost MIT.
No, even before that.
Oh,
this
was
when he was he was at a Maryland board, and he basically said that his view was that the ICO was likely a securities offering, but the Ethereum is no longer a security. Obviously, he started changing his tune when he got to the SEC. So I just can't imagine. So that's one thing. And when he was at the CFTC, he was very pro crypto. You got to also remember. So basically, if he wants to go out and claim Ethereum as a security, not only is he going to be fighting the industry, he's also going to be fighting the CFTC. And if that is indeed the case and Ethereum is deemed a security, they're going to have to delist every CME Ethereum futures, as far as I'm concerned, I think. And they'll likely have to delist the Ethereum futures ETFs, which he went ahead and approved. So I don't see that happening unless he really goes nuclear and scorched earth, which obviously he can, which is part of the reason why our odds are nowhere near as high as they were for spot Bitcoin. But I just think the path of least resistance is just, they're going to approve these things and basically wage war on the rest of the industry. They're going to wage war on the likes of Solana and everything else that we just spoke about, but not Ethereum.
And that's what I was going to ask about next. So, if you think ETH has a greater than 50% chance of approval this year, does that mean that anything beyond ETH, Solana, Ripple, Doge, anything else is just a long shot for an approval anytime soon for some sort of ETF?
Yeah, I mean, I'd say near 0%, probably. I guess theoretically, if you get some final ruling in Ripple and it's deemed to be not a security after that court case and all its appeals are done, maybe you could get one. But other than that, you literally need an act of Congress, like a market structure bill that could dictate what's going on here. So I think it's literally ETH and then nothing else is even possible in the near term, in my view.
Very interesting, because some people have been trying to craft a Solana ETF narrative for after ETH, but it seems like the expert here, James Seyffart, says absolutely not. Go ahead, James. Go ahead.
You need futures, which you don't have. The SEC is not going to allow them to CME to list Solana futures. And Solana is named as security in multiple lawsuits. So even if we get these lawsuits done, there's going to be appeals. It's going to be finalized. It's possible to get up to the Supreme Court. Like, nothing's happening on those other tokens that they're claiming to be securities until those court cases are done, in my view.
Fair enough. I know you can't give any sort of, price discussion or any sort of financial advice, but I wonder if you have any thoughts on this. We saw Coinbase stock, MicroStrategy stock run up going into this ETF approval. They've now pulled back. Investors can now get direct, theoretical direct exposure. Obviously, a Bitcoin maximalist would say that the ETF is certainly not direct exposure, but, direct-ish exposure to Bitcoin through these ETFs. Do you think that Coinbase and MicroStrategy, I don't know, can you give any insight into how you think things play out for these equities, given that there's proper spot ETFs in market at this point?
Yeah, I mean, they're very different. I view Coinbase, like, a lot of its revenue isn't just from Bitcoin, right? Like, it's from these other assets, which again are a long way off. It's a cash generating business. It's a profitable business in many, I guess, depending on the quarter. But so it's very different. Same with MicroStrategy. MicroStrategy is almost like a leverage play that's moving. It's almost like an active ETF in a sense, in the way that it's getting exposure to Bitcoin with using debt offerings and different things. So I basically thought the multiples potentially on MicroStrategy might get impacted by the Bitcoin ETFs, because some of the demand from MicroStrategy would come over to the spot ETFs because it's more direct, simple exposure. But there are benefits of if you want to use what Michael Saylor's strategy is, to use MSTR. It makes sense. I don't have like a really advanced view on like, oh, this thing is going way down or way up. And then the other thing is Coinbase is doing way more than just offering, but they have base now. They have so many other things that, like, there's way more narratives than just like, this is the crypto play, but it's possible. We talked to a lot of advisors who want exposure to crypto, and they don't necessarily want to hold these spot ETFs. They don't want direct exposure to crypto. They prefer some of these equity ETFs that are thematic and hold things like Coinbase and other players like Galaxy's equity and things like that, because they're more comfortable holding equities. So there's still going to be demand for stuff like this, companies that hold Bitcoin on their balance sheet, stuff like that. So I don't have a real complex niche view on like how this is going to play out, really. I do think some of the demand will be siphoned because these spot Bitcoin ETFs are a more efficient means of getting exposure directly to Bitcoin. But there's plenty of other use cases where I could make the argument why I'd rather own one of the other assets over a shorter term time frame.
Fair enough, and appreciate the answer. My last question, I don't know if Nick or Signal has any more questions, but I wanted to ask a question, and this can be even broader than just the Bitcoin ETF. How strategic is the pricing around these ETF products? Because on this show, we talk a lot about unit bias and the fact that people in general just seem to prefer. That's why a stock split exists, right? Is even though you're just slicing the pizza into more slices, people feel like it's cheaper. We see the price of, I don't know what the price is of iBit right now, but I think it's probably under $30. Yeah, there you go, $22. How strategic is that pricing? What goes into pricing these ETFs?
Yeah, for the most part, it's exactly what you said. These ETF issuers try to keep it in the double digits. Usually they launch around $25. Some of them, like ARKB and others launch with basically 1,000th of a Bitcoin. So their price will roughly correlate to what the Bitcoin price is. So if Bitcoin's trading at 39,000, it'll be around $39. But that gets eaten away a little bit by those fees I was talking about. But when they're so low, it's not that crazy. But yeah, it's the unit bias is definitely a thing. And if they get too big, they try to lower it, particularly those leverage ETFs that are used for trading. They like to keep those, we call them handles. They like to keep a low handle, for traders who want to hold like 100 shares. It's way easier to do it that way. But at the end of the day, it's still your performance is dictated by the percentage change in the underlying asset. So no matter what you do, you're buying 1-to-1 exposure to Bitcoin, I guess is what I would say to different people. But if it also like kind of breaks the brain of some people who are like, I don't want to buy a $42,000 asset, but maybe I'll buy a $22 one. So that's obviously kind of what's happening. But for the most part, it doesn't make that much of a difference. But it obviously on the fringes, it plays a role.
I have one other question, which is a little more of a technical one, back to the fee conversation that was being discussed earlier. If basically the ETF providers are a termite eating away at the wood, and the wood being the underlying asset, in this case, Bitcoin, and they're literally pulling that out directly from the overall holdings, how do you end up does the gap between the value just continue to expand, or like, how does that gap get closed? What accounts for filling that back up?
So the basket every single day. So every single day these market makers, these authorized participants, and anyone with like tied into these TradFi rails, they know exactly what's in the ETF. They know how to value it. So every single day they have a basket. They know what's in the ETF. They know what the shares are backed by, and they're valuing it. So over time, that's why ETFs are so efficient, because Grayscale and ETHE were and are broken products, because there is no way to do that creation redemption mechanism, right? You can't create shares or redeem shares live during the day. But with ETFs, you can do that. So what happens is, like, at the end of the day, you can always exchange the underlying asset. These are cash create only, which kind of makes it a little more confusing. But right now, basically, you can always exchange the underlying asset for an equivalent amount of shares. So at all times, that's why these NAV and the discounts don't really show up, aside from like minor percentages of difference here. Because at some point, if the shares get too expensive and the Bitcoin is worth down here, all you do is you buy the Bitcoin and sell the shares at the same exact time, and that's free arbitrage, because you can always exchange them. They're always equivalent for people to do it. So that's basically how it works. So they know exactly what's there. They're pricing the shares of the ETF, and the fund accountants are calculating the actual NAV per share. So they know exactly what's behind and backing these things, and that's how the prices are dictated in the open market.
Got it.
Which is why I said, if you use a limit order, you can use the market system to get what you want.
Awesome. And just one last question for context, James, before we let you go. Could you explain to the audience that might not know the difference in friction, like how much less friction there is now that there's an actual spot ETF options in the market versus before, for an institutional investor to get exposure to Bitcoin?
So the difference between like now what this offers to institutional investors than what they had before?
Yeah.
Yeah, so a lot of institutions were restricted to only holding securities. They're the way that they were set up. They wouldn't be able to hold something like Bitcoin. So for those institutions, they can now hold the ETFs. Other ETFs can hold these ETFs. Other mutual funds can now hold these ETFs. And they don't have to worry about those discounts and premiums I was just talking about. advisors, a lot of advisors and wirehouses and brokers, they're on these platforms, and these platforms basically say what you can and cannot buy. A lot of them had stuff set up, not a lot, but a good chunk of them had stuff set up with people like Swan or Galaxy or OnRamp, where like you could buy the assets underlying for your clients. But that's a huge lift. That's a lot of work. It's to get that set up and own the underlying asset. But it's kind of like the same end result. And for the most part, with how cheap these ETFs are, it's another reason why it's beneficial. But if you're an advisor on one of these platforms, do you really want to set up this process, open a new account in Coinbase or what have you, deal with cold storage for your clients' assets, especially for something that you're thinking about putting 5% of their portfolio in, or 2% even? Like, it's way easier just to click buy on something that's for 2% of your portfolio, in the way that you buy basically the rest of the exposure for your clients. So that's the benefit that this is. So like I've been saying since even before we got the approval, guys, don't worry about the short-term stuff. There's going to be a lot of like recycled money moving around. There's going to be a lot of noise, but like watch what happens over the next 12 to 18 months. That's what will matter. I haven't seen any like serious big institutions getting involved here, but there's a lot of advisor networks that are going to use this. Some subset of their clients are going to use this in a subset of their portfolio, which Galaxy did a great report on, basically how a lot of people are thinking about that from the advisor and broker world.
Fantastic breakdown. Signal, you have one last question for James before we let him go?
Yeah, James, on that point, were you surprised to see that Vanguard banned having these ETFs on their platform? And do you think that's going to affect adoption in any kind of way, or Vanguard will eventually just have their hand forced and have to have these products on their platform?
Yeah, I do have to run after this one, but that's a great question. No, I was not surprised. Actually, I will admit, I was a little surprised they completely banned it. I was very much of the camp that Vanguard will never launch a Bitcoin ETF. It's against their ethos. They don't have gold ETFs. They're against anything that doesn't create cash flow, which I feel like breaks a lot of like crypto people's brains. Like, if it doesn't create cash flow, it's not a financial asset in their mind. They don't have commodity ETFs. They do allow you to buy gold ETFs, but they don't allow leverage ETFs on their platform either. You can't trade the 2x S&P 500 ETF, which people were like, oh, they allow leverage ETFs. It's like, guys, they don't allow leverage ETFs. This is not that crazy. This is something they've done before. The other part, there's a lot of other names that were thrown out there: UBS, Merrill, Bank of America, like all these different things. Like, they're not allowing it either. This is crazy. And it's like, no, that's just how this works. Like, for the most part, like, you have to, the de facto default is like, you can't buy this unless it's gone through due diligence by our compliance team. And we've done the work on this. We kicked the tires. It has a certain number of assets. Many times they need a certain level of track record, certain level of volume before. So basically, de facto is, this is in the red list. You cannot buy this. And then sometimes some things can go into the middle ground where like you have to jump through some hoops and you can buy it for your client. But to get to the green list, like, which is you can just buy this, is a whole different level. So like, not everything is like Robinhood or Schwab, where you can just go in and buy it. A lot of these have like a much heavier touch in what they allow their clients to use, because they don't want clients that don't know what they're doing buying something like a 3x natural gas ETF and blowing themselves up. So like, was always going to be the case with these Bitcoin ETFs, which is why I kept saying wait 12, 18 months for these platforms to allow people to buy their own ETFs. Some of them are run by advisors and financial professionals, and some of them are just like brokerage accounts that have a bit of a heavier hand from the likes of Merrill Lynch and UBS and what have you.
Nice pun. No pun intended there on the blowing yourself up with the natural gas ETF. Anyway, ladies and gentlemen, James Seyffart, follow him at JSayf. That's at JSEYFF on Twitter. He's blown up on Twitter in a huge way over the last 6 months. He's the guy when it comes to ETFs. James, anywhere else people can find you besides the Bloomberg office? Any newsletter, anywhere we should point them?
No, right now it's really, if you have a Bloomberg terminal, I'm publishing obviously a lot. You can reach me on Instant Bloomberg, which is like basically AIM, but that's what all the TradFi people use to talk. So that's how I talk with most of our clients. Feel free to reach me there. But really, I'm pretty accessible on Twitter. I try to reply to a lot of people, answer questions. But that's where most people can find me. But yeah, if you have a terminal, feel free to reach out. Always happy to chat with clients.
Appreciate it so much. And we definitely need to have you on again in the future as this space continues to progress. Also, I noticed that you were at an event in New York. I don't know the name of the bar, because you were at that bar.
Pub Key.
I'd never been there. I wasn't aware of that bar, and I was
like, Bitcoin bar, Nick. It's a Bitcoin bar.
No, I understand. I saw that. So it made me want to go there. But also, we should definitely put something together sometimes for an in-person event. But anyways,
yes, one of the best smash burgers in New York City. They have like genuinely good food at that bar. So it's a dive bar, but it's fantastic. Yeah.
Awesome.
Absolutely. Well, thanks so much, James. We'll let you go, and I really appreciate you joining us today.
Thanks, guys. Have a good one.
You
Later.
too. See ya. Ladies and gentlemen, James Seyffart, give him a follow at JSafe, at JSEYFF on Twitter. Really enjoyed having him on the show today, discussing all things Bitcoin ETF. Want to remind everyone, today's show is brought to you in partnership with Steve from Coffee with Captain and his book, The Everything Token. So this book sets out to explain crypto, explain NFTs and the digital asset ecosystem to your family and friends that just don't get it, or obviously to yourself if you want to get a more nuanced understanding. It's available on Amazon Prime today. The Everything Token is the name of the book. Very nice cover right there. Available physical hardcover, also available on Kindle. Looks like he's got an audiobook too, so I don't know if he read that himself. That's pretty cool stuff. But check it out. It's just over $25 on Amazon. Again, The Everything Token by our friend Steve from Coffee with Captain. Those are the partners of today's show. And that's our show, ladies and gentlemen. What a great guest today, James Seyffart. Really breaking things down in a super easy way when it comes to all things Bitcoin ETF and the future of other ETFs in the crypto ecosystem. We hope you enjoyed listening. We do the show Monday through Friday, 9 a.m. Eastern time each and every week here on Twitter Spaces. Also available on audio podcasts, wherever you get your podcasts, Apple Podcasts, Spotify podcast. If you want to share the show with someone outside of the Twitter bubble, or if you just want to listen on the go, listen at 1.5x speed, then audio podcast is definitely a good way to go. Apple and Spotify podcasts. And then, of course, the video stream is available on YouTube. Subscribe on YouTube or on X platform. We're also streaming video. So we're wherever you need to find us. We hope you enjoyed the show. We'll be back tomorrow. Thank you so much for listening. And once again, big shout out to James. Make sure you follow him on Twitter and other social media platforms. We will catch you tomorrow